Binh says, would you recommend legging in an Iron Condor depending on the direction of the stock? In this market, yes. And in fact, leading up to the last 2 years, prior to the previous 3 years, the last 3 years I haven't traded an Iron Condor. The 2 years before that, most of the ones I was trading or ever traded, I should say most of the ones Ernie ever traded, most of the Iron Condors Ernie ever traded prior to the last 3.5 years ago, 2.5 years ago, whatever, were legged into. They weren't opened immediately. In this headline-driven market, again, it's tough to gauge, but I would probably say I'd feel more comfortable legging into an Iron Condor in this type of market than opening it from the beginning. Even with a 4-day out, 5-day out weekly option, I'd be more tempted to start the position I felt most comfortable with. Start the bull put or the bear call, the direction I felt most comfortable with the day I was opening the trade. And if things started to work out as I wanted to, then leg into the position. Side note we have to comment on that is that if you are focusing on weekly Iron Condor spin, or you're trying to do SPY or SPX with the Monday, Wednesday, Friday expirations where you're only 2 days out in time each cycle, I don't think you're going to have the time to leg into it. If it doesn't happen within the first day, then you're not legging into the position, okay? And honestly, there's another thought on that. You know, using a weekly option, if I said, well, I want to leg into it to maximize my return, I'm more bullish than I am bearish right now, so I'm going to open the bull put first and then wait for the bear call if it matches it. That kind of thought process to me tells me right there you're not confident in the Iron Condor structure in the market right now. You should just be doing the bull put because that's what you had the most confidence in to begin with. Why complicate it? Yes, it gives you a little bit extra oomph. I know. Yes, you get a little bit of extra net credit. I know. But if you're not comfortable with it, why stress about it and just open the one position that you're comfortable with the direction of the current day market, okay? Yeah, and if you're doing, okay, Ben, all I was saying is that I wouldn't try to stress yourself out with legging in positions if your focus is under 1 week or maybe even under 2 weeks out in time. If you're going 3 weeks out in time, if you're doing a monthly Iron Condor, sure. Legging into it will probably work out to your benefit. Some news comes out, it goes up, you're going to get much better premiums for higher strike calls than you would have started out with. But again, it's difficult, okay? Yeah, and Sam says markets are still in a bullish scenario. We talked about that also in the webinar at one point last week, or 2 weeks ago. I'm sorry, it was 2 weeks ago. Let's just go to big charts again real quick. Someone on attendance said, what is your expectation of the market? Well, I'm not an advisor, and I'm not going to project where I think the market's going. But if we just even look over the last 2 years, on something broad, like SPY, and I'm going to go back 2 years. Now, I strongly feel that the market has wanted to be bullish. And you see disasters in here. Of course we do. We all see disasters. But the market wanted to do this, and it did that through 2018. That's why I said this is one of the reasons I didn't do Iron Condors. I'd be getting stopped this whole cycle. I'd be getting triggered on the bear call side. What is this? February 5th through 8th. And this one is March 21st through April 4th. And then here's that stretch of almost... Well, now there's that other one, June to August, but then all of a sudden August to October. This also, unless you skewed it, remember if you skewed the stock price to be here, closer to the bull put side and further out on the bear call, if you put it in the middle, you are likely getting stopped out every 2 weeks or so on the bear call side on this position. And then you get destroyed on the bull put side. This didn't seem like a year for me to be doing Iron Condors. This didn't seem a year to me to be doing Iron Condors on that side. December 26th up and through March would have been tough to control the bear call side in Iron Condors, and then you get killed on the bull puts. Then you get killed on the bear calls. This looks like a good time period. This looks like a decent time period even though there's fluctuations. This does not. So that's why it's difficult. That's why it's difficult to do it in this situation with these kind of things with the Iron Condors, okay? But yes, I do agree that, look, the markets wanted to be bullish. This was that volatility crush February 5th and 9th. This was this actually here, this March 21st through April 4th of 2018. That was the first volley, if I'm not mistaken, of Trump mentioning billions of dollars of tariffs on China. And the market wanted to do this. Here was that other little glitch. It wanted to do this. And then we all remember October through December of last year, right? Then that happened. And the market really wanted to do this. Tariff talk, if I'm not mistaken. Market really wanted to do this up. Tariff talk, if I'm not mistaken. So I'm not going to get into any discussion about that one, anything beyond that politically or anything like that. But I agree with Sam. The market has been wanting to do this. It's been wanting to do that. It seems like it, doesn't it, to me? I could be oversimplifying things, but that's what it feels like, but the glitches get you. And that's why like Sam said, contra ETFs. He also mentioned the bond market just now, TLT and HYG possibly as a hedge or as a way to trade. But you need something there to hedge that. Okay, you need something there to hedge. So on record saying that I haven't done Iron Condors, on record saying that, I usually allocate 10 to 15% of my portfolio to bull put credit spreads and an additional 2 or 3% of my portfolio to VIX calls, where I buy them when they're down below maybe 15 or 14 and hold them with a 30, 45 day expiration. So if something like what we just saw happens in these recent time frames here, I may get stopped out on my bull put spreads. And to answer the question there, my stop on my bull put spreads is if the stock reaches within 1% of a short put strike price. But if it blows through the strike price from an event like this, the morning that the market starts to fall, it goes through my strike price, I'll trigger that spread. I'll trigger or close that spread if it's at 50% loss as well, just like the long calls. But thankfully, though, I might close out a spread here at a 20% loss when this dip happens. My second spread might be at a 60% loss. My third spread might be at a 40% loss. Well, that's okay. That averages out to where I want to be, roughly, a little bit under 50% loss. Meanwhile, my VIX calls in this case might have hit a 180, 190% profit. Okay, so I'm using that to counter the loss I might take over here, even though it's a much smaller portion of my portfolio than the 3 positions I might have allocated in spreads. Okay. But yeah, so Sam uses contra ETFs. He's more comfortable with those. A benefit of the contra ETFs like UVXY is that you can actually own shares of UVXY. So he has the ability to turn it into a covered call, a married put, a collar position, so back ratio with owning UVXY or something along those lines. Now, I can do similar things with the long call, but it might require margin because I don't own the shares outright. That's where the contra ETFs have an advantage, is buying calls of a counter market volatility or counter market ETF. Going on. But I just want to remind everyone that today's material are my thoughts and your questions, designed for educational purposes, increasing investing knowledge and performance as well. Any stocks or options discussed today should not be taken as direct trading suggestions or recommendations. Options involve risk and may not be suitable for all investors. Earlier we talked about the 14-day free trial and the 4 steps. I just want to remind everyone, if you haven't done so already, you can go ahead and go to poweropt.com. And you can go ahead and just put in your name and email address, and you can get access to a 14-day free trial with no credit card required. After the trial, the subscription levels to Power Options start at $45 per month for the end-of-day service, and we have services ranging through 20 minutes and the 20-minute delayed, and real-time also as well. If you want to take out other free education on our extended weekend here, remember you can take the time to yourself in the extended weekend. Check out blog.powerup.com. The webinars page there, powerup.com/webinars.asp for the different strategy and options concepts presentations. You can always check us out on YouTube as well. All right, and if you do think of any questions later on, remember you can send me an email at any time to support@powerup.com or support@radioactivetrading.com. You can also reach us during market hours at 302-992-7971. Reminder again, markets will be closed on Monday, and we will not be available by phone on Monday as well. And of course, remember, trial members and subscribers, you can schedule a coaching session at any time. Again, that's a 35 to 45-minute phone conversation with myself or Ernie. We'll walk you through the tools on the site and answer any questions that you have. All right, so Tom said, thank you, Mike. Ben says, thank you and have a fantastic weekend. Thank you, Ben. You have a great weekend as well. Sam says, thank you and have an enjoyable long weekend. Sam, I hope you have a wonderful weekend as well. And thank you for sharing your comments with us on your recent trades last week, of course, the contra ETFs and more. And to all of you, have a fantastic weekend as well. And thank you for your questions also. I'm going to try to get this webinar converted, posted, archived, and ready for everyone, available on Saturday before we technically go over into September. But if not, it'll probably be available for you Sunday. So you'll have time to watch it over the weekend as well. Tom, you have a great weekend. Also, everyone, thank you again. Take care, everyone. We'll see you soon. Good night.